were talking about Syngene, right? And Syngene is actually down and out in trade. But Jonathan Hunt, MD and CEO of Syngene International, is actually joining in with us this afternoon, actually, to talk mainly in terms of what is the Q2 fine print looking like, where should we be expecting the growth of the company going forward, and in terms of revenue guidance for the company as well, which they have cut. Now, thank you so much, Jonathan, for joining in with us this afternoon. Firstly, obviously, let's start by talking about your revenue growth guidance that you've cut. Now, what made you do that? What was the reason behind this, and which segments are likely to see an impact also going forward?
If you look for the guidance, we guided for high teens growth for the full year. We've softened that a little bit to mid-teens. It's still pretty good growth, I think, on a full year basis. Certainly, it's a gain share strategy, I think, compared to both the industry and many of our competitors. That level of performance takes us forward, helps us gain market share. But you can isolate it back to the US biotech funding environment. So it's a segment. It's probably most relevant to our research services business. And there's just been a little bit of a slowing over the last year on the rate of capital going in. It's reduced. It was at an all-time high during the pandemic. So we are coming off a sort of once in a generational amount of capital flowing into US biotech. And it looks now to be settling out around pre-pandemic levels. Certainly the latest data points suggest that's becoming much more stable. So it feels like a blip. It's a temporary issue that we've got to work through as those companies adjust to that new funding environment. And I suspect it'll just work its way through so the remainder of this year. If you step back out of that US biotech segment, look at the rest of the business, so big pharma, big biotech, or whether or not you look in Europe and Asia, those markets seem to be pretty much insulated and unaffected by that. So fundamentals, no real change. Strategically, not really a change for us. It's a little bit of a softening on what's a growth rate and a pretty good performance for the full year, I think, if we come in at mid-teens growth.
Hi, this is Anish also joining in the conversation. So you talked about the growth on the top line, but what about the EBITDA margin and the guidance that you had given on profitability as well? Does that stand?
I think margins, the expectation there, margins will be there or thereabouts on what we guided. We said of EBITDA, for example, around 30. I still think we'll come in around 30. There's an element of discretionary expenditure, but we'll see how that flows through. So I don't expect a particular change at this point of the year in our margin outlook for the full year. It's just a little bit of softening in the US biotech segment.
Also, if you could just share a bit in terms of your segmental sales, the breakup that is coming in for Q2 as well.
Sure. Well, I'll talk about it qualitatively. We don't break it out, report by individual segments. But as you know, our longer term strategy is to evolve from being a 100% CRO research services business to a more balanced one that has both the CRO, the research services, but also the development and manufacturing. And this quarter and during the first half, we made really good progress on that. Where we continue to see good growth, good progression in our development and manufacturing businesses. If you look at the first half, we saw the FDA approval of both our biologics manufacturing for commercial manufacturing and also our small molecule commercial API plant. They're strategically important foundations. We're seeing good progress on the partnership that we signed with Zoetis now, in full effect and delivering well for them. So I think that restructuring and that evolution of becoming not only a bigger business, but one that's well balanced between both the manufacturing development side and the discovery research side is turning out exactly as we expected. So more of the same. And that's precisely the plan, not just for the second half of this year, but for the years ahead.
Okay, but talk to us about the margin performance. Yes, you talked about that at least going forward, you're not seeing any incremental pressure. But if I look at this quarter, there was a sharp decline, both in terms of Q on Q as well as YOY. What led to the GM decline?
No, I think it's well understood by the capital markets as an element of sort of mix effect in the business. actually the strategy I just talked about. If you contrast the research services with the development business, much higher component on the development manufacturing side of things like raw material costs, but they're a much more people-light business. They're less people-intensive. So they're just different businesses with different dynamics.
Also just in terms of if you want to understand what is your capex plan, what is the guidance that you would give for the second half of the year, and where do you want to focus in terms of your capital expenditure? Which areas are you concentrating on?
Yeah, in line with the plan, we said about $80 million capex for the full year. We did about a little over 30 million in the first half. The remainder I expect to be deployed in the second half of the year. And it's spread between some of the things we've got in research services. So we did a land acquisition in the first half in Hyderabad. That gives us an awful lot of growth capacity for the next 5 and 10 years in terms of developable land to build on. We'll start to put lab infrastructure on that in the second half. We've got some expansion here in Bangalore and some new lab facilities. And then, of course, we also did the non-GMP plan that we brought online in the first half of the year. So more to do in the second half, 30-odd million in the first half of the year, another 50 million of capex to go into the second half of the year should land us pretty much in line with our full year capex guidance.
Okay, Jonathan, on that note, we'll let you go. Thank you so much for joining us.